It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, December 3rd, 2015, cruising our way through this first full week of the month of December. The volatility kicking up. We got the second big day of major news. We heard from the ECB. We heard from Yellen today. Nothing really new out of them today. But boy, do we have a jam-packed newsletter in store for you guys and gals. Tomorrow's Friday, and we have two major news events tomorrow. The monthly non-farm payroll report is due out at 8:30, which is being anticipated as the last report the Fed's going to use to justify raising rates this year. You know, Janet Yellen, she pretty much said she was going to raise rates in 2015 when she was signed in office. This is starting to get to the end of the year here. She's going to make a big decision coming up. Also tomorrow morning, we're going to have the highly anticipated, tons of gossip flying around ahead of the OPEC meeting tomorrow in Vienna, which is going to give oil traders much needed clues ahead of a possible production cut. Remember, they're trying to curb this falling price that they've seen basically since the end of 2013. It's been pretty much straight down. They've dipped into the 30s a few times here. Is tomorrow going to be the day? Now, this major news, both of these major news events tomorrow are going to give us, expected to get extreme volatility and, of course, very low liquidity. What that means is there's excessive risk to our trade accounts tomorrow morning. So our plan for tomorrow is to trade around the news events. Be careful. It's 8:30 tomorrow morning, and then it'll be around 9 o'clock, 9:15 that we'll hear from OPEC. Here's the plan. Trade around the news events. We'll be watching them in real time tomorrow morning. Our trade room opens up at 8 a.m. You don't need to do this alone. Here's the big thing for tomorrow. With such excessive volatility expected, if price starts to move aggressively in one direction, don't you dare trade against that direction. This is when I tell everybody watching my newsletter, if price takes off like a banshee to the upside, don't you dare sell into that news reaction. Capiche? And if you don't know what I'm talking about, please, please, please do not risk any real money tomorrow, right? Lose all the money on your simulated account you want, but don't put real money to work unless you know how to spot a runaway market. All right, now that we got that out of the way, crude oil is bullish tomorrow ahead of the Friday's OPEC meeting. Surprise, surprise. Let's think. What could crude be ahead of the OPEC meeting where they're talking about cutting production? I'm going to go with bullish, JJ. It definitely is. We're seeing higher highs and higher lows. We get a very interesting scenario on crude. We get a really wide bull channel and this cute little bull flag all telling us to stick to buying. But here's the deal, though. We really have to get a deep pullback if we get any chance to be a seller. So sellers going to stay patient on crude tomorrow. We got a plan for you guys in a moment on that. The S&P is bearish after a huge collapse today. We saw 3 strong legs down this week, which tells us the S&P sellers are likely a little bit tuckered out and they need to take some profit. Now, that does not mean we can be a buyer tomorrow because we've pushed higher here, but I'll be watching tomorrow to see if those bulls on the S&P can show proof of a pullback. I got a plan on the S&P. Don't you dare buy this thing until you watch this video tonight. On the gold, the yellow metal is rotating higher inside a bull channel this evening, which means we'll focus on completion of the measured move and channel rotation using pullbacks and seller failures on the gold. Nice, easy scenario on gold tomorrow. We'll see how it plays out. And, of course, the euro, after Mr. Draghi further decreased. Is it decreased into negative territory? I always got lost in math class for that. It's more negative. Does that mean they increased or anyways? They made it. They did exactly what they were expecting to do. They kept pushing rates lower just as we expected. That of course sends the bullish higher. Which, by the way, I still can't understand why the euro goes higher when they're talking about negative interest rates. Anyways, that's not the reality here. We're trading the chart. We're bullish today on the euro. 3 pushes today on the euro, which tells us to expect a profit-taking correction off the highs. So our plan is to wait for the pullback and look to see who takes control from there. As you can see, we got a really busy day tomorrow. We got a plan for crude S&P, gold, and euro. Before we jump into today's charts, I do want to remind you to make sure you're watching this video on our trading blog here at sidewaysmarkets.com. If you're watching this video on our YouTube channel, there's a link right in the description of the video. That link will take you over to our blog. A couple reasons why. If you're not a member of School of Trade, I'd love to invite you into our trade room on a free pass. Grab your free pass in the upper left-hand corner. If you'd like to join the newsletter mailing list, you'll never have to worry about missing another one of my crazy videos ever again, our nightly newsletter videos, of course. All I need is your name, your email address, and then make sure you check your inbox. I'm going to send you a verification email to make sure you got the email. And then, of course, right below the video, you'll see a spot to download all the charts you see me using in tonight's video. Grab them below that video. And then over on the right-hand side, you can register for a trial membership where you can really learn how we trade here at School of Trade. You can get more information about membership. And don't forget, we've always got someone standing by 24/7, 365 to give you guys a hand. Whew, my mouth's tired just talking about that. Let's jump right in. Starting off here with the crude, I got to move fast. We got a lot to cover here tonight. Now, the hardest part right now is I can't justify anything technically to be a seller. The only scenario I see tomorrow is if OPEC comes out and says, nah, we ain't cutting production, we're going to increase production, and this price will probably tumble. Other than that, right, other than some, and again, I don't expect to hear that tomorrow, but I'm going to be waiting just like you will. I haven't been in that meeting all week. So, very difficult to be a bear right now, really because the farther we pull back, the more support we run into. And, you know, we want to buy low, sell high, right? Isn't that the kind of the key to success in anything? Buy low, sell high? Well, that's what we're trying to do here right now. Crude is bullish ahead of Friday's OPEC meeting. We have a wide bull channel and a bull flag, all telling us to stick to buying until we see proof otherwise. We have a well-defined plan of attack. Here's what it is. The most reliable opportunities are going to come buying at the low of this channel. So we know we have a major channel, and we're hoping to get a chance to buy that low. That would be the ideal scenario. As you can see, they pushed this sucker higher today after getting that nice collapse off the highs, right? Just as we talked about last night's newsletter. But they held the low. Higher low, this now becomes an ABCD up, and they overshot, obviously, the measured move. Not a big surprise. Again, we're going into OPEC's meeting tomorrow. No shocker there. Now that leads into a bull flag, and this is where it starts to get a little bit complicated. I want you to think about buying low, selling high, buying low, selling high. This bull flag is going to keep rotating lower until we see sellers fail and it busts through the roof. Now, again, without knowing what news will be tomorrow, without knowing exactly when the announcement will be made on OPEC, what it will say, it's impossible for me to tell you exactly what to do. But I do know, though, is that as we're coming lower, the ideal, right, if we're a bull, we're looking for buyers to come off these lows. And ultimately, the easiest way right now, right, so we see the most reliable opportunities buying the low of the bull channel. And the bull flag tells us the safest way to buy will be after sellers fail at the short-term channel high. The bear's got to be very patient for tomorrow. We really won't be able to sell this until we see the buyers struggle here to hold that low. So as we go lower, the bull flag tells us we can start buying as soon as the flag fails. That means seller failure, buying into the failure. I assume it will rotate a little bit lower here overnight because of the overshoot of that measured move, right? Measured move overshoots the resistance into that channel. So we're definitely looking for a break, test of that low, and then buying opportunities up off that low. The hard part right now is going to be when it does come down, if and when it does come down, you're going to see sellers attack that next retracement. That's where we need to wait for those sellers to fail and buy right into their stops. Most important thing, though, is if you're going to be a seller, you really got to be patient right now. A, B, C, D, leg takes us down. We expect to see the buyers fail. And then, of course, right, you can sell into those stops of the buyers. So right now, if you're a bull right now, If you want to be buying prematurely to the low of that channel, you got to wait for seller failure to buy into their stops. If you want to be more patient, wait for a measured correction lower, down to the low of that channel. Wait for another round of sellers to try and fail and buy that low. That's the ideal scenario for tomorrow. If you're a bear right now, the hardest part being a bear right now is where are you going to sell without selling directly into support? Now, we could look at selling down from an ABCD. So what that will tell us is look for a price to pop up, look for a short-term pullback to fail, and sell it down to the measured correction. From there, though, we have to be careful. We assume there's going to be a ton of buyers trying to buy that channel rotation. It also lines up with the high of that short-term range, right? So we just assume there's going to be some buyers there. If you want to be a seller, wait for it to pull back. Wait for the buyers to wait for the buyers to buy that pullback, find their stops, and sell right into those stops. And keep waiting for those buyers to keep trying to buy and fail. That's going to be your safest bet after we hear from OPEC tomorrow. Again, this is probably going to be the most challenging market tomorrow, just because from what we've heard from OPEC so far this week, it's been a very confusing bit of dialogue back and forth between these countries. It's going to be interesting to hear what happens tomorrow. Don't forget, it'll be between 9 o'clock and 9:15, 9:30 typically is when we hear that announcement tomorrow morning. So we definitely want to make sure we trade around that report. Come out and join us tomorrow morning. And of course, we're looking for these opportunities in real time. How about the S&P? S&P is bearish after today's collapse. 3 strong legs lower this week tells us the sellers will likely need to take profit. So we'll be watching the buyers closely tomorrow for proof before we do anything. We know the bears have control right now, and there will be profit taking after a big move down this week, but we can't buy anything until we see the buyers hold a pullback. This price can easily get above the moving average, can easily break some of these resistance areas overhead. Again, profit taking from the sellers. You're gonna have bargain hunting from the buyers. It's going to send this price higher. This does not impress me whatsoever. What will impress me is on the next pullback, can they hold the next moving average pullback, the next support level pullback? Can the buyers really show strength? Because until then, we have no real reason to be a seller here yet, because in all reality, this long-term channel pull back and sell it right back down in. So got to give the bears the benefit of the doubt right now. If we see the buyers hold that next pullback, right? If they hold that next pullback, then we're definitely interested in short-term buying opportunities up to the resistance area overhead at the top of this channel. If you're a bear right now, you want to see the exact opposite. If you're a bear right now, you want to see this price pull back, right? Can't hold and tumble back down. Ultimately, if you're a bear right now, you're selling right into buyer pullback failures. If you're a bull right now, wait for proof. Wait for the price to hold a pullback. It's going to be better to be late to this party. If it wants to go higher, it's got a huge move to make. Remember, tomorrow we've got non-farm payrolls at 8:30. So this could be a very strong number tomorrow, and this could definitely push higher. But again, be a smart trader. Don't predict. Wait for the pullback. Once you see it hold, then you know the buyers mean business. You'll have other traders jumping in with you, and you'll be more confident buying back up at the very least to the top of this channel, right? At the very most, possibly making up all the ground from yesterday. So right now, if you're a bear, you focus on calling the bluff of those buyers on each pullback. If you're a bull right now, wait for proof. Wait to see the next pullback hold on a slower time frame, and then you can go forward, right, buying those dips on the way back up. Careful on the S&P, though, tomorrow, being a little bit too aggressive. How about the gold? The yellow metal is rotating higher inside of a bull channel this evening, which means we'll focus on completion of the measured move and channel rotation using pullbacks and seller failures tomorrow. The key to gold right now is buy low. Buy low. Wait for pullbacks after new higher highs, or after we see a correction lower, wait for seller failure. So very similar to what we're talking about on crude oil. Wait for a correction lower, seller failure, right? And then buy into those stops. Watch the trading range for range rotation if we see the bears successfully pull this back, right, to the range low at 1054. So as we go higher here right now, if we go higher, make a new higher high, we're looking to hold pullbacks and buy pullbacks up to that buyer target, which is the major measured move. Once we get to that major measured move, you're going to have to sit on hands and wait for a correction back down and then pay close attention to see if they hold. If they don't hold, it'll end up right back where it came from early today's session. Okay, so we know right now, bullish channel, channel rotation. We're expecting channel rotation up to the highs. Once we get up to the highs, that will complete a major measured move. That tells me expect bulls to be taking their profit. Wait patiently for price to get down to that low of the channel, and that's where you've got to watch. If they hold it, you can keep buying. If they don't, look out below. We'll see a possible bear trend starting and a rotational environment, right, going back lower. If we go lower, key is going to be look for sellers to try to sell, buy into their stops if we go lower. If we go lower, if we test the 1054 even, that creates a balance range again. Buy low, sell high, buy low, sell high, with the emphasis, of course, being on the buy side because of the directional bias going into that range. If we go higher, you're buying pullbacks up to the buyer's target, then take a break and wait for the correction. If we go lower, you're watching for sellers to try and fail, buying into their stops. If we go lower and it gets to 1054, we then go into a new, we return back into that balance range. Remember, it's a bullish bias going into it. So buy the lows, buy the lows, buy the lows, bear traps, buy the lows until proven otherwise on the yellow metal. Don't forget, if we get to the buyer's target, you've got to be suspicious of that next pullback, because that trend is most likely over and the sellers will have their way with it next. Last but not least here, wrapping up on the euro. The euro is bullish, also with 3 pushes higher. Now, you don't see this very often. They talk about cutting rates lower and the price of the currency goes higher. I know. It doesn't make much sense, but luckily we don't trade reality, folks. We trade the chart we're seeing right now. So euro is bullish with 3 pushes higher. The S&P took all week to make 3 pushes lower. The euro did it in 1 session. Just think about that for a second. This is the euro we're talking about, a very liquid market. This thing's got some legs. This tells us to expect a profit-taking correction off the highs. Look for a measured correction. Our plan is to wait for the pullback and then look to see who takes control from there. We can assume the buyers need to reload the weapons again, so we expect to see a trading range tomorrow with a bullish bias. The bulls will want to wait for the pullback, then watch sellers fail to hold the next retracement and buy into their stops. Bears got to be careful. Bears need to see the price break down and hold the next retracement before thinking about selling these highs. It's very similar, just the opposite direction on the S&P right now. So as we can see, we've got 3 pushes higher. These 3 pushes higher happened in 1 session, folks. This doesn't happen very often. 3 significant pushes higher. If these bulls can keep this going, they deserve a round of applause. Most people now are going to be taking profit. And usually on a scenario like this, usually we're going to see this thing range out, right? I mean, it's not bearish. We can't be bearish yet. But it's just you got to put yourself in the buyer's shoes. They're shooting blanks now, right? They click, 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 click. They're not firing bullets anymore. They're out of bullets. With that said, we're expecting to see, I would expect to see a trading range tomorrow. I'm kind of guessing right now that this might be the range, right? 0974 down to 0793. This might be the range. I'm going to have to come in tomorrow and see where it goes. But obviously, though, because the buyers are expected to take profit, because it's a bullish market, it's not a bearish market, we expect to see limited downside to this. More importantly, though, I wouldn't be surprised at all if this turns into a trading range with a bullish bias. So look to buy the lows of the range, take profit of the highs, buy the low, take profit of the highs, and then, of course, if it breaks higher, be very, very suspicious of a break higher. Remember what happened on Monday with the S&P? Tried to break higher, got slaughtered right back to the downside. Yeah, that's what happens after 3 pushes higher. By the way, I'm clearly not an English major. There we go. Leg 3. There we go. So 3 legs up. If this thing pushes higher, don't you dare buy it. Let somebody else buy it. That's one of those moves you're going to have to wait and see. You're going to have to miss that initial breakout. You do not buy the high. What you do is you look for the pullback to hold. If it holds then you've got some proof, right? Then you can go out, find another fourth leg higher and use that for your target. But don't buy that high, right? Not with my account, not with your account. Don't even do it on a simulator. Remember to practice like you're going to play. What's more likely to happen is we see a fake break of the high, buyers try to buy the pullback, they fail, and we come collapsing down, possibly to the 0793. We have an unfilled gap here around that 0841. Assuming we go lower, if you want to be a buyer off that, wait for the sellers to try to sell short, buying into their stops. Really right now, if you want to be a buyer, buy low. Wait for the price to come down. Wait for the sellers to try to sell into it. If and when they fail, you're buying into their failure. If we do make it down to 0793, I would expect that's going to end up being your range. So watch and see what happens tomorrow at the 0793. If you see a pretty good reaction from the bulls, you can pretty much expect what's coming next. It'll probably be, again, it's a bullish market, but with such excessive bullishness, I mean, how much further can we go? And I realize the market can go as long as it wants, but it's going to have to, these buyers are going to have to reload the weapon here at some point, and that tells us to wait for that deep pullback. As we go lower, you're looking for seller failure to buy that low. Again, if you're going to be a buyer, the only scenario you cannot do is buy that high. If it breaks higher, hold on tight, wait to see it hold, because if it fails, that's where your best trade's going to be. Even though it's against a trend, you know there's going to be a lot of sellers aggressively selling it. If we make it lower, right, buy into that retracement. Again, I don't know where that range is going to be yet, right? The range might only be here, right? I don't know where that range is going to be yet. I'm kind of anticipating that 0793 right now. Definitely we're bullish right now. Buyers buy low into seller failure. If you're a seller, really the only way you can do it right now is to look for pullbacks to fail and keep selling into those pullbacks. Just be aware though, you're counter trend trading as a seller right now, unless we get some juice coming in off that high where we fake break the high and sell it back down. So seller failures are the path of least resistance during the pullbacks on the euro. On the gold, don't forget we're expecting channel rotation. If we get up to the buyer's target, you got to be patient to wait for the next pullback. If they fail that next pullback, then it goes into a bearish correction mode. We'll probably be doing that for the rest of the day tomorrow. Okay, if it goes lower, seller failure to buy into their stops. On the S&P, if you're a bull right now, wait patiently to see the pullback hold. Then you're running up to channel high, right? Then you're running up to major consolidation areas. We'll be trading this market in real time tomorrow in the trade room. And then, of course, on the crude oil, very difficult to be a bear right now. We know the best opportunities right now are going to be buying. I would wait for the sellers to try to sell. You can buy into their stops. I think that's going to be the most aggressive way to do it. I think the most important lesson right now is going to be waiting patiently. Let's see what OPEC gives us tomorrow, knowing that the best trades are going to come into lows and knowing the best technique is waiting for sellers to fail and buying right into their failure. If we do break down below that channel low, that's when we'll start considering being a seller. But again, as you can see, it's very difficult to find any breathing room right now for these sellers. It's going to be very difficult to thread that needle and find a way to sell until we see it break down, come back up, hold the pullback, and then give us some proof. Give everybody else the proof. Because you know everybody and their sister-in-law right now is going to be looking to buy crude oil because we all expect they're going to be talking about cutting production tomorrow in the OPEC meeting. I can't wait to see what happens tomorrow. Tomorrow is going to be one of the Probably one of the best days of the year. We're going to hear from the non-farm payrolls, which should put a stamp of approval or the opposite, right, on the raising rates this year, which has been on our minds all year this year. I can't wait to get that out of our system. And, of course, OPEC tomorrow, the shenanigans they've been pulling, the gossip that's been coming out of this pre-meeting meeting in Vienna has been nothing short of Comedy Central, right, shenanigans. The drama never stops regarding the oil market. This is the stuff that you love, right? This is the stuff that keeps it interesting. So, guys, come out and join us tomorrow morning. We open up our trade room at 8 a.m. Eastern time tomorrow. We'll be trading all this stuff in real time. And don't forget, grab your charts, be ready for tomorrow, and trade around that news. Remember, if you see a runaway market tomorrow, don't you dare trade against it. We get some big news tomorrow. And like I said, if you don't know how to define the proof that we're looking for tomorrow, that should tell you right away. Come out and get your education, right? Knowledge is power. Knowledge is power. And every day we execute that knowledge with a proven trading plan in our trade room. Guys, we get a great free trial. Check it out at schooloftrade.com. We have 3 levels of membership: beginner, intermediate, and advanced. That way everybody has a home here at School of Trade, whether you're a brand new trader or you're a seasoned veteran that's still trying to figure out how to put all the pieces in the right sequence. And as always, I've got someone standing by 24/7 to answer all your questions. Guys and gals, what a great week. The next time you hear from me will be next Monday evening. I don't trade the afternoon session on Friday. We don't do the newsletter on Friday. I'll see you back next Monday. If I don't see you tomorrow morning in our trade room or our chat room, I hope you guys have a great weekend. Excellent job this week. Don't forget, share this video with a friend. Send me some feedback to jj@schooloftrade.com. Give me a thumbs up on the YouTube video. And don't forget to be well out there. Be nice to each other. And follow the plan for tomorrow. I'll see you then. Adios, amigos. Bye-bye for now.